Hey folks, Bob Desmond here at the Contrarian Trader, and welcome to Sunday Night Futures Live. Thanks for joining in. It's going to take a few minutes for everybody to join in. Hopefully, we have a nice size audience. And what we're going to do is we're going to go through the opening price performance of the futures tonight. Then we're going to segue over and into the headlines that I think that are going to set our strategy in place for the coming week and weeks. And I'll talk to you about that more in a moment. Then we're going to talk about some symbols that we're watching for the new trading week. We're going to do a deep dive into those symbols. And then we are going to take some stock chart requests. So drop a note in the chat box of symbols that you're interested in having me review, and I'll certainly take a look at them for you. So, hey Tom, how you doing, man? Welcome aboard. Okay, so let's get to a cursory overview of how we're opening up the futures market. Before I do that, actually, this was an article that just hit the wires moments ago. So it's going to be interesting to see how crude oil opens up this evening. This is off of Zero Hedge. Oil set to spike after report Saudi repairs at about whatever it is may take up to 8 months. That's huge. So let's take a look at the pre-market activity, or I should say the Sunday futures activity, and we'll begin with a technical issue. That's better. Okay, let's go with light sweet crude. Four-hour basis. We are open here. We were higher. We pulled back a little bit. But we do have a new daily high. Yep, there's your gap. Okay, so with that, I want to take a look at how the futures markets are reacting. The stock market futures. Let's go with the S&Ps first. Okay, sorry folks, I got to reboot. The joys of being live. I'll tell you. So while this is rebooting right now, Tom, I see that you have some symbols in there. Okay, we'll take a look at those. We're seeing some people fill in here. That's good stuff. Timing is everything. It's absolutely everything. I hope everybody had a great weekend. I'm excited to get the week started here because to me, Sunday night's like Monday morning. It's the markets are open. I'm a junkie for this stuff, so I'm excited. And of course, we're getting an update as well. I think it's swim. All right. So while this is loading up here, let's talk about the news that is going to help probably move the markets this coming week. Oil is one thing, but the Federal Reserve meeting is out of the way. So why does that matter? It matters because like last week, we had the attack on the Saudi Arabian refineries, and the concern was that the Federal Reserve wouldn't move on rates to the downside because a spike of inflation. Now, this week, you don't have that Fed concern. So I don't think the market is going to be worried about oil inflation ahead of a Fed meeting. So it's probably not going to have that much of a major impact. Oh. I was told last week that I didn't. I don't believe this. All right, guys, we're having some technical issues here. I don't believe this. Okay, sorry. So much for the futures this morning or this afternoon, tonight. I don't believe this. Okay, sorry, folks. It's not letting me bring up the futures. All right, so what we're going to do is we will talk about the charts that we're looking to go over this coming week. But first, let's talk about positions that we had. What did we do last week? NUGT, we were up about 23% last week. The week prior, we were in there. This is a weekly chart of NUGT. We were in there buying some more on weakness. And last week, we had a nice pop-up higher. We're expecting to see gold and the miners continue higher from here. Last week was a nice inside week, no new high, but we're looking for that breakout. And the one thing that I'll point out with NUGT, and will probably be the same for any of the other gold mining ETFs, is that when you throw up a heat map here, you can see that this dark red, you can see that this represents a ton of resistance that we're fighting back and forth with. But once we get above the 45 level, which is where we topped out a couple of weeks ago, the resistance levels above become far less. So the ability of NUGT to move higher with less resistance becomes a lot easier once we close above the 45 mark. Now, taking a look at gold last week, actually, you know what, let's stay on performance last week. USLV, we were up about 8.5%. I think that we press higher from here. This is a weekly chart. And one symbol I didn't talk about earlier that we are long was Angie's List. And we did not do well on that last week. And I want to talk about that for a moment. So before we go to Angie's List, USLV, we're looking for a breakout on a weekly basis. Next stop, right about here, 123.84. So a lot of upside potential here. And again, using the heat map feature, once we get above, say, 130 per share, there's not much in terms of overhead resistance above. Now, Angie's List, on a weekly basis, the reason why I didn't close out the position, we were down on this position last week. We closed right at support. So I didn't want to go selling into a support level. So this was not a profitable trade. It is not a profitable trade. We may need to stop out of it, but I wanted to touch upon this one because I talked about uh, NUGT and USLV on swing trading today. I did not speak about ANGI, and I wanted to bring it up just for clear transparency. Now, is this a good week to average on Nugget? Hey, Miffin. Uh, yeah, but only on strength, Tom. I would only want to average up, not average down at this point in time. Let's bring it up. All right, so I have every reason to believe that it's going to proceed higher. I think that if we put in a new weekly high, you could nibble more, you could add more on strength. Now, if we gap down for whatever reason tomorrow, that would definitely be a concern. And I would not average down at that point in time until we figure out what's really going on. Is it the fact that oil is spiking higher? There's concern that there's inflation out there. The Federal Reserve is not going to have the back of the markets. That may be the knee-jerk reaction, but it's probably going to be the wrong knee-jerk reaction. And I'm going to tell you why in a moment. I have proof that the Federal Reserve is back in the QE business. And I'm going to show you that chart. Stick around. All right, so I believe that the market, without looking at the futures right now, without the benefit of having them in front of me, because my charts, my software won't open up. Talk about timing. I don't believe it. We have the trade talks are back on. Here we go again, right? How many times have we seen this? The trade talks are off, then they're back on again. We get this stuff over the weekend. They spike the market higher. Why? Because the markets were weaker last week on the back half of the week. So again, we're being toyed with. In all probability, there is not going to be a deal before the 2020 elections. If we do get a deal, it's going to be a bad deal. So I'm not looking forward for a bad deal or any deal whatsoever before 2020. Once the elections get over and done with, then we're in a far greater position of strength because President Trump has 4 more years to hammer them over the head. Now, a reason why the Federal Reserve, Barun, the car industry is really sinking now. This is an article, again, off of Zero Hedge. Global Carmageddon continues. Mexico total vehicle exports crushed 12 spots, 7% in August. 1 month. 1 month. And Mexico is a huge producer of automobiles now. They are the big beneficiary of jobs lost in the auto industry in the United States. So to see this headline here is a major concern for global manufacturing. It's not just a U.S. issue. Now, I mentioned earlier that the Federal Reserve was back in QE, and oddly enough, we have a headline out here. Former head of plunge protection team says Fed has to buy more debt. Forget this. This is old news. And I'm going to show you now, right now, proof evidence that they are in the bond buying business. It's QE4, it's cupcakes, it's whatever you want to call it. They haven't named it anything yet. But here we go. 10-year view. This is from Fred. This is the Federal Reserve Bank of St. Louis. They put out all of these graphs and charts, statistics. It's really good stuff. And this is I believe, a 10-year view. And you can see how the Fed's balance sheet has just ramped up. If you take a max view, going back to 2003, the Fed's balance sheet was $800 billion. We now stand at, get a load of this, 1-year view. We are, I did the math earlier, they did $75 billion last week alone in bond buying. So the Federal Reserve, their downtrend of bond buying just ended last week. They are back in QE mode. So Would I want to be a shorter of the stock market? Probably not. Let's bring up. There you have it. They're spiking the futures, all because of this report here and the fact that the street is finally getting hip to the fact that the Federal Reserve is back in QE mode. Let's check out gold. Gold is up, silver is up, platinum up, oil up. Wow, wow. Brent crude up nearly 1.5%. Nat gas rising. Taking a look at yields, unchanged. The US 10 years unchanged. Okay, so let's get to some stock chart requests here. For Tom. You looking to get long of GLNG, Tom? This is a weekly view, and we have overhead resistance above. We backed off of it last week. So GLNG, I would not be a buyer of at this point in time. Now, what I just did here, this is TrendSpider. There's a link to their website below in the description area. If you're interested in this charting software, use CT25Z as your discount code, 25% off, CT25Z. So what I'm using here on a weekly chart, I just overlaid monthly support and resistance levels. And you could see that last week we closed above monthly resistance. But the concern here, if you're looking to get along, which it looks like you are, Tom, going back to a weekly chart, we have resistance right here at 13.96. I would be a buyer on a rally and a close above this upper band of resistance at around, let's call it 1390. Taking a look at a daily chart. So we had a breakout on a daily basis on Friday. In fact, you could just call this a bull flag setup as well. We'll just leave it as a triangle formation, 6 of one, half dozen of the other. So we broke out last week, but you can see that we have some topping action here. In the futures, Bill? Nat gas down in the futures? Hey, Bill. All right, so Tom, I think that the chart is looking good. I think you have weekly resistance above. I would wait for a new weekly high and what would appear to be a close above weekly resistance. So me, I would just set my alert. All right, so we'll keep this live. Set it and forget it. Okay, so that's GLNG. Okay, for swing trade. Oh, so you're looking really short term. Yeah, the daily chart looks good, Tom. No doubt about it. I didn't take a look at the hourly chart. I'll take a look at the hourly chart now. Hey, Patrick, how you doing, man? Let's take a look at an hourly chart of GLNG. Uh, it looks good, and you can see that where we have the sensitivity setting on the alert, meaning I can't change it here. Here, if I do it here, I could set a sensitivity range around the alert of when it begins to enter that realm of nearing the resistance level. We're right there. We're bordering on a breakout here on a daily basis and then rallying up to this resistance level here. So if you get a new daily high, in all probability, we're going to rally up to resistance. Then the question then becomes, and this is the big question, right? Do we break out or do we roll over? That's the big question. I would look at a correlation between GLNG and nat gas. I would overlay them. If you have stockcharts.com, you could do that. I don't know if I could do that with TrendSpider, and I would look to see whether or not you have a correlation. And if that correlation is positive and nat gas is moving higher, then you could assume that GLNG is going to proceed higher as well. Let's take a look at the SOXS. All right, so this is the bull ETF. I want to point something out here on the semis. And Tom, I went over this on the week ahead commentary using the SMH, the fact that we had a breakout point failure. It's not showing that on the SOXL, but on the SMH, it did. And we pulled back last week, and we are now putting in lower highs on weekly basis. So I'm not going to be the least bit surprised to see them spike this market early on Monday. They're already doing it now. I'm going to assume that we're going to open up strong. And if we close above 199.91 on the SOXL, then it's game on. Let's bring up KOS. KOS looking good here. Weekly breakout. And when you take a look at several weeks worth of resistance, we closed above it. We did back off the highs of the week. However, we closed right at what was resistance is now support. That is bullish stuff. So I like the setup here on KOS. RSI is rising. Let's go to a daily chart. All right, so what was a series of support levels below is now going to act as resistance above. It's just the way it's going to work out. So I would be careful here. I think that these shares could be bought, but just keep in mind that this upper band of resistance here, once we hit it, we're going to back off. Just be careful where you're buying. I think the shares are a buy. I like the setup here on KOS, especially with the price of oil rallying right now. That is going to put a bid under the energy stocks. In fact, I have this up here to discuss right now. The XLE. The XLE is pulled back very, very nicely on a daily basis. I think that we're popping higher early next week on the XLE. I'm not loving the weekly chart, but given the fact that oil is spiking right now, I like XLE, and it's probably going to move higher. So we'll probably get this coming week an inside week. We probably won't take out last week's highs, but it'll probably be an inside week, and that's okay. That means the selling on a weekly basis anyway is done. I doubt we're going to put in a new weekly low here. Let's take some additional quote symbol requests here. We'll stick with Tom. TMQ. Trilogy Metals. It wasn't an uptrend. This is a weekly basis. Yeah, I don't like it, Tom. When you take a look at the shares on not only just a weekly basis, but on a monthly basis as well, I'm making the assumption that we're going to close where we did on Friday or lower. If we manage to recapture this support level and close above it, well, then do you have a retest of the lower band of monthly support? And then the game may change. It may be a buy at that point in time. But assuming that right now we close where we did on Friday or lower, I would want to avoid the shares because the probability of a continuation move lower outweighs the probability of us moving higher because we failed to hold prior support. It is now going to act as resistance. We'll take a look at a daily chart, see if anything is happening on a short-term basis. And yeah, you can see that we may just have a higher low forming here. So on a short-term basis, if we rally back this week and we manage to, going back to a monthly chart, manage to close back above this resistance level at current, it should be support. If we do that, then we need to revisit the shares, and there's a good possibility that they may be a buy. So how would I do this? I would do as a, well, you're a shorter term trader. So let's do it your way. Let's go with the daily chart. And I would do this. Create an alert. I don't want to touch it. I'm not interested. I want to break through. I want to keep my sensitivity level low. Daily breakout. Okay. Possible long. Now, note to self here. This is what I do. Watch monthly resistance. Okay, that's key. We'll keep this active for a few days. And we're good to go. All right, so that would be the play here. I want to see it close above these resistance levels. And if we get that, then in all probability, we'll be back above that monthly resistance level, and then it's game on to the long side. Okay, I'll do one last one here for Tom. We have a whole bunch of other ones. SPKE. Energy sector, oil is rallying. In all probability, you're going to see a bid under the energy stocks this coming week. I like the setup here. We broke out here on a daily basis out of a triangle formation. We have been bouncing around, retesting. I think that these shares are going higher. I like the setup here. RSI validating. We're moving higher. Watch for a breakout on RSI. I think you have game on here as a long trade. For safety's sakes, I'm going to stay on a daily chart. What I'm going to do is I'm going to bring up a weekly overlay. I'm going to take the daily trend lines off, and I'm going to bring up weekly. And I don't see much in terms of resistance above on a weekly basis. We'll go to a monthly basis. Boom. Oh, this is beautiful. So what we have here is on a monthly basis, a breakout on a monthly basis, and we are now retesting support. This is all good stuff. I like this trade. Thank you for bringing it to our attention. Let's throw an alert up here. Let's take our crayon out and say, okay, what I want to do here, I want to create an alert okay. This is good stuff. So the good part here, or I shouldn't say the good part, what you need to watch out for is one thing, okay? One thing. You want to make sure that the last trading day of the month, we are trading above this support level here, okay? That is key. If it breaks, well, then the trade is off the table. However, if we rally up and through this upper band of resistance and close there, it doesn't matter where we trade intraday. What matters is where we close. So if we rally up and through that level, it's game on. It's a buy all day long, in my humble opinion. I cannot give a financial advice. Let's see what else we got up here. AKAM. Akamai. All right, so it's odd that I have, this is a daily chart, and what you're seeing here is monthly resistance, right? So when you have a dashed line, that means that I'm using trend lines from a different time frame than the time frame I'm looking at. Like this is a daily chart. This dashed line is a monthly overlay of resistance. So that's where you saw the shares back off of. Let's pull back, take a look at this from a higher level view. We've come a long way here. I think that the shares can be bought if there's a pullback. I'm not saying there's going to be, but if there's a pullback, that you'll probably see the shares rest at the 20-period moving average. How do I know that? It's because historically, that's what Akamai does before it proceeds higher. So I would buy on that pullback. I would scratch the itch. I wouldn't get big with it because we know we have a lot of overhead resistance above here on a monthly basis. Remember, this is just a weekly chart. Now, if we close above this upper band of resistance here at around 94.50, then I would look to put on a long trade. Or if you're already long, I would look to add more to that position on a closing basis. 3 p.m., that 3 p.m. hour, that final hour of trade, that's when you make the decision. Please don't do it before that final hour of trade. Too many times you have the rug pulled out from underneath you. I don't want to see that to happen to anybody. Let's Tesla. I haven't taken a look at Tesla in a while. Let's bring it up. All right, so Tesla, what I want to do here is I want to bring up a monthly time frame. And I honestly don't like what I'm seeing here. You have a lot of topping action. Actually, I'm getting ahead of myself. You had a rollover, and we are putting in lower highs and now lower lows. So the trend has changed from up to sideways to now down, right? These past couple of months, we have been putting in topping tails, including this month. And as you can see here, using the automated trend line feature, we have resistance right above here at 256.26. You have your moving averages, which are declining. That's a 20 period, which is declining now. And that is a concern. So I wouldn't touch these shares until we closed above this current resistance level. Taking a look at a daily chart, it's just barely holding on. In fact, on a daily basis on Friday, we closed down below daily support. Doesn't mean it's going to stay there. Maybe it's going to pop up on Monday, but if it doesn't, I would avoid the share. I would avoid this as a long trade, and I wouldn't short it either. Hey, Colton, how you doing, man? Germano, Bob, I have a couple of questions. How much exposure do you suggest to have in terms of percentage of a portfolio to NUGT and USLV? All right, so very good questions. So it goes to risk tolerances, okay? If you are risk adverse, you cannot have a big portion of your position allocated to leveraged ETFs. You can't do it. If you are not sleeping at night, then you are too overweight of a position. And believe me, sleep tells you everything you need to know about what your positions are. Sleep tells you if you're positioned wisely. And if you can't sleep at night, you are too overly weighted to any one position, especially leveraged ETFs. So if you're risk adverse, uh, I would keep no more than 5% in leveraged ETFs, no more. Uh, if you have more of a risk tolerance and you have a longer term perspective on the market, as I do, my strategy is to have core positions, meaning we already have a big core position in the NUGT. We've had it for months now. Going into 2019, we've already had it built up. We've traded in and out of it. We've added to it. It's gotten bigger. It's going to get even larger. USLV, we were in it. We sold out of 100% of it. It's now pulled back. We're going to begin to build that position back up again. Then I'll swing trade around those positions like with Angie's List. Those are much smaller trades. And those are just doubles and singles. I'm looking for core positions in long-term trades that I believe are going a lot higher. And when you go back to the fact that the Federal Reserve is now back in the bond buying business, that validates what I've been saying for over a year. They are going to go back to cutting rates. They're going to begin QE all over again. And they are validating what I've been saying. And the shares of these ETFs, NUGT, are reflecting it. They want to go higher. Beautiful week last week. I think that we're going to move higher fairly soon here. So it all depends, not to get away from your question. It depends upon your risk tolerances. I have a large percentage of my portfolio dedicated to the precious metal names. So what the risk I'm able to absorb and live with and sleep with may be far different than what you're able to. So I would say whatever you're comfortable with sleeping with at night, then you're positioned wisely, as long as you're getting your sleep at night. Baroon, HON, Oh, Geronimo, can you comment on the charts of Twilio? Sure, I can do that for you. All right, so Twilio, and I may be changing over them for my alert system for email, text alerts. So I hope that they do well. So we had a gap down last week, and we managed to close higher on the week. As a matter of fact, the week before it closed down below weekly support, and then last week we managed to recapture. So assuming that we do not give up this support level, I think that the shares are a buy because we are in an uptrend, And there's no reason to believe, absent some news that I'm not aware of, that we can't proceed higher from here. But we cannot take out last week's lows. If we take out last week's lows, you need to get out, stop out. So Twilio is looking good. Daily chart, nah. Daily basis, it's consolidating. You have resistance above at 120. So if we put in a new high on the week, I think that we could rally up here to 121.49. Then you need to get concerned. If this is a swing trade, I would be looking to book profits at that resistance level. Now, if you're looking for Twilio to be a longer term position, then I would do this. I would say, okay, let's take the daily trend lines off. Let's bring up my weeklies. Not much happening there. Monthly. Not much happening there. All right, so we're not getting a lot of information on resistance above. So let's just do it ourselves. So let's take our crayon out and do this. Here is the Pimp Mac Daddy of resistance levels for Twilio. You are marking the upper bands of prior resistance. If at such time we rally and close above, let's call it at current, the 120 level. Remember, this is a declining resistance level, so it's going to change. But at current, let's say it's at 120. If we rally up and through it and close there, then it's a buy. I think you can buy the shares right now and hold them up to 120. But if you're looking to buy these as a longer term investment, I would wait for 120. I would look for a close above that level, and then I would be a buyer at a close above 120, or at whatever such time we break out above this declining upper band of resistance. And it could be at 117 2 weeks from now. It's going to change. So you need to take your crayon out, draw your trend line, set an alert, and then you're good to go. AYX. Axos. Let's take a higher level view first. All right, not much in terms of historical data here. All right, so what I would do is I would show patience here, and I would buy the shares on a close above this resistance level. And again, this is going to change because it's declining. So I would set it up. Oh, this is the wrong chart. You wanted AYX. I'm sorry. I happen to like this chart, so I'm going to save it anyway. AX. God damn it. Okay. We're good to go. So AX looking good. I'll bring up your chart now. I misread it. AYX. Okay, something happened here. Let's go to a monthly view. Yeah, we have a problem here. The problem here with AYX is that we have an outside reversal month or a bearish engulfing of the prior week's move. That's very, very bearish. Very, very bearish. Actually, I'm sorry, an outside reversal month. It's a bearish engulfing of last month's price action. Let's go to a daily chart. I would avoid these shares. There's just too much. There are too many other good stocks out there right now to go hoping that you're at a support level, and we're not. If we break down below the lows back here, we're going down to this lower band of support. So I would not buy these shares. I would avoid. Albert, hey, how you doing, Albert? Hi, Bob. If I wanted to buy Nugget and SLV in the money call options, how far out would be reasonable? October and November monthlies? All right. I have a rule of thumb here. If I'm gonna buy call options, I would normally go out if I'm not hedged. If I don't have uh, a a bull spread on to hedge that position, I would go out no less than 3 months, because the time decay is just going to erode your position. And God forbid, you know how NUGT trades, when it gets hit really, really hard. So I would look to go out. I would look to go out 3 months if you're not going to hedge. If you're going to buy in the money call and sell an out of the money call, then on a breakout of the shares, then you can go with a 30-day contract, a 60-day contract. But if you're not going to be hedged with that sale of the out of the money call, which is going to hedge, it's going to discount that option for you, and it's going to provide you a little bit of breathing room if the shares go against you. I would go out 3 months. Okay. Albert, I would average into NUGT on strength. I would not average down. I would average up into the trade. So I want to see. Let's go. Let's bring NUGT since it's a hot topic up. Okay. So let's be clear about something. While I'm bullish on NUGT, I don't want to talk my book. Okay, it's the last thing I want to do. So I want to point out that all we had last week was an inside week. We didn't recover all the gains from the prior week. Right? We made up a lot of them. Right? So I don't want to add more to this position until me personally, because I already have a big position. I don't want to add more until I get a breakout above this upper band of resistance here. I want to get through all these sellers. Remember the heat map I brought up earlier. Note where the dark area is and where it ends. The dark area ends, and that just means that dark area is real serious congestion, a lot of overhead supply. It's right at where monthly resistance is at, let's call it the $45 per share level to use a round number. And if we get above that level, I would be a buyer. I would look to add more because the markets are telling me I'm right in my trade. Now, if I don't have a trade on right now, if I don't have a position on and I want to buy the NUGT, I would do this. I would throw up a 4-hour chart. We've already really broken out here. I would, on a new weekly high, I would look to add. I would open up a position on NUGT, scratch the itch, get your foot, your toe in the water, then look to add more on a breakout above the $45 per share level. If that makes sense, I hope. Let's see what else we got up here. Okay. Do we have, oh, Shopify and Roku. Good ones. Very good ones. Roku got killed last week. Let's take a look at it. All right, so the higher level view. We always want to go with the higher level view. And the higher level view at current is that we have a bearish key reversal on Roku. Bad stuff. Weekly view. Bad stuff. We've broken trend. We closed down below the lower band of support last week. So on a monthly view and a weekly view, the shares are not looking good. Taking a look at, we'll stay on Roku. Let's go to a daily chart. Let's see if there's a short-term bounce here possible. And what I'll be looking at is RSI, which is, you have certain technicians out there, they write these books, rules of thumb, RSI down below 30 levels oversold. No way. If we break this support level where we closed on Friday, in all probability, we are going to head down to oversold levels on RSI, which in my book is RSI 20 or lower. Now, this support level may hold. If you're going to put in that stop loss order right away, and you put it right below the lows of Friday, which was at 127.41, and you stick to it, you could trade this up to resistance here at around 124.44. I mean, not much of real gains for the risk that you're taking on. But no matter what I say, you're gonna do this trade, please use a stop loss right below Friday's lows. 4-hour chart. Let's see whether or not we have anything happening on a 4-hour basis. And yeah, we're showing signs of the beginning of a consolidation. Ideally, we would trade within this descending wedge formation, and then I would look to buy the shares on a breakout and above this upper band of resistance on a 4-hour basis. So let's create an alert. Now I make these notes to myself as a reminder of, not that I would forget, I always watch Roku, as a reminder of what there we go. So the alert set of what I was thinking at the time I was analyzing the charts. I put my notes in. So that's what I would do. Once we get a trigger, that means that we've broken through this resistance level here. I would look for the pullback and a retest of the breakout point, because we want to see what was resistance will then, after a breakout, act as support. Let's bring up Shopify. You're welcome, Germano. Thanks for joining us. Where are you from, Germano? Okay, so Shopify, let's begin. Oof, another one. Monthly chart. Uh, it's an engulfing month. If we close out the month where we closed on Friday or lower, the shares have a major, major problem. And in all probability, they're going to pull back. I mean, they've had a heck of a run. They rallied out of this bull flag setup, and we spoke about this too. There's the breakout. What a run. Now, the problem is that, let's see whether or not, let's bring over to a weekly chart. Now, we do have some support below here, but I have to be honest with you. We may see support at 285.95, and we may bounce off of that level. I wouldn't bet that we're going to see a bounce back this coming week. Maybe we will. All right, but I would wait until later in the week to see whether or not we're going to close up on the week, or do we fade into the back half of the week, because we're going to begin the week off with a lot of excitement. The Chinese are going to talk to us again. They're coming to Montana. We're going to have a trade deal. More nonsense. 4-hour chart. Actually, we broke out here on a 4-hour basis, but you know, a 4-hour chart on a stock that's breaking down on a monthly and on a weekly basis, I wouldn't put all that much weight into it. If the shares were in an uptrend and we broke out in a 4-hour chart, then I would get a lot more excited. But right now, I would be concerned about getting long of Shopify. Again, I would wait for, and if it does happen, I would wait for a pullback and a possible bounce off of the 285.95 level, or one of these support levels down here at around 252 and rising though. So this will change over the course of time. This will stay static, this horizontal support level. These are rising. They will not stay static. They will continue to rise, so it'll change week over week where support is. All right, let's see if I can bring up. Yay! Yay! It's let me in. I think I had my cap locks on. So let's see what the futures are doing now. Okay. Let's kick it off with the dollar. All right, so the dollar is up slightly, but we're off the highs of the session. We're in a trading range. RSI still looks good. We broke out on the 20th. And we are hooking up higher. Let's check out gold. All right, so no shock here in that we closed out. Let's update this. All right, so these are the 3 standard deviation Bollinger Bands. No shock that we're getting a pullback here, or sideways pullback. We had a big 4-hour bar on Friday. We were higher on the session. We're now pulling back a bit. No shock. Let's take a look at crude. All right, so crude is broken out here. It's broken out above this upper band of resistance. This is a 4-hour chart. These will all be 4-hour charts. We're pulling back now to do a retest. Here we are. So here was the breakout. This is a 30-minute chart now. We're pulling back, retesting. I think we're going to move higher here on Brent. That's going to bode well for the energy sector. Let's go back to a 4-hour chart. Crude's going up. Let's take a look at the 10-year. This is the 10-year Treasury bond price, not the yield. And so far, we have an inside 4-hour bar relative to the closing bar of Friday. So no shock. But remember, the thing to remember here, folks, is that, and especially if you're just joining us now, this is the Federal Reserve's Bank of St. Louis Fred Economic Research Report. This is the total assets on the Federal Reserve's balance sheet. They have been declining. Last week, they broke out. So the Federal Reserve is back in QE mode. And they will do everything in their power to keep this chart moving up. And that will bode well for gold, silver, here's silver now. Silver's looking really, really good here. Really nice in that what we're doing is we broke out on Friday above this upper band of resistance. So this actually needs to be turned green yet again. So this is now resistance. This is now support. So we're struggling now to rally back on silver in an effort to try to break out here. I think it's going to do it. Would I be a buyer right this very moment based upon this chart? No way. When would I be? When I see a close back above this resistance level on a 4-hour basis, and ideally a close above this 4-hour bar last seen on Friday. So silver looking very good. Let's take a look at the stock market futures. Yep. Yeah, we went over that story a little while ago about the Saudi refinery being down. Tom, yeah, I'm glad you reminded me, Tom. I'm going to go over LABO. I want to talk about that. Thanks for bringing that up. All right, let's take a look at the NASDAQ. The NASDAQ 100, wow, we're up nice. We're up nice. Look at how we were breaking down on Friday. We broke support. We were going. And what happened? Yay, the Chinese trade talks are back on. Yay. Incredible. Incredible the manipulation that's going on here. So I think that we are going to see a positive open tomorrow morning, absent some geopolitical risk that's out there that we don't know about. So NASDAQ is looking good. The S&Ps, the E-minis, we're just barely holding on to 3,000. We're up a half percentage point. Can't argue with that. So it'll be game on. Just looking at this chart, I would say that just take your crayon out. Here's your resistance level. We rally up and through this upper band of resistance. We're breaking out to new all-time highs. I'm saying it right now. I think they're going to do it. You're going to have the Federal Reserve. They already announced last week, the Federal Reserve announced that they were going to still be in the bond market this week, supporting it, adding more liquidity. So I would expect the S&P 500 to rally here and break out to new all-time highs. Let's leave off with Bitcoin and we'll take a look at LABU. Bitcoin backing off here, still holding 10,000. So not much going on here. I wouldn't buy it. I wouldn't sell it. All right, to LABU. So LABU, I like to sell puts against. Nice premiums. Nice consolidation here. So we do have resistance above. This is a weekly chart. Resistance above at 39.58. You might as well just call it 40. 40 is the magical number. So what I would do here, me personally, I like to bring in premium. So I would probably, on a close above 40, I would sell an at-the-money put on the 40 strike price, probably going out a week, maybe 2 weeks. But I think that LABU is going to break out here. Why? It's because if you take a look at, not that they trade in tandem, I'm not saying that they do, but if you take a look at the bring up Cure healthcare sector, we're breaking out. Let me rephrase. We have broken out on the healthcare sector. So I think that what I think you're going to see less in terms of alpha on the, meaning total return on the info stocks, technology, and I think you're going to see materials. You're going to see healthcare. You're going to see biotechs. They will see money flows into them, and that will send the rest of the stock market higher. Does LAB usually go up if IWM up? That's a good question. Let's figure it out. I love a good question like that. So what I do in this situation here is I bring up wrong filter. Price performance. I'm going to use IWM behind the price. We'll make it blue. Now this is all too noisy, right? So what we'll do is we'll pull back. I doubt there's much monthly data on LABU. And yeah, it's safe to say that LABU does trade consistent with uh, the IWM. Now, IWM at current is outperforming the LABU. That doesn't mean it can't play catch up. And in fact, you have a here, let's do this. Nice consolidation here. You have the beginning of a W formation on the LABU, meaning here's the left side of your W, here's your pivot point, here's the right side of your W. Once we break out and above 66.50, we're going a lot higher. That will allow it to play catch up with the IWM. So to answer your question, yes, there's a correlation, but at current, IWM is outperforming the LABU. Good question. All right. With that, I'm not seeing much more in terms of requests here. We are over an hour into it. I'm going to say goodnight to everybody. Please, if you're not currently a member, sign up for the 14-day free trial offer. If you're not ready yet, that's cool. Just at least click the like button, hit the subscribe notification bell, and follow me on YouTube. And everybody have a great remainder of your Sunday and have a profitable trading week. Be well. You bet, Tom. Take care. Have a good night. Nathan, have a good night. RL, good night, man. Thanks for participating. I really appreciate it. Have a great night, everybody. Albert, you bet. Be well.